Terence Moll, if UK and EU strike a deal in 12 months it'll be a miracle. On the 12th of December 2019, the evening of the general election, Seven Investment Management held its staff Christmas party. Chief strategist Terence Moll and the senior investment heads were humming and hawing about whether to interrupt the festivities and send people back to the office to keep an eye on things, but, in the end, they didn't see any way to profit from the result. In Moll's experience, it is incredibly difficult to make money from macro calls. Elections and such are profoundly unpredictable, he says. First, you have to forecast what the result of the election will be. Second, you have to forecast how markets will respond to it. The first of those is difficult and the second tends to be very, very difficult. The initial market reaction is usually knee-jerk. Sterling skyrocketed to $1.35 against the dollar the day after Boris Johnson's landslide victory, but a week later it had dropped back to $1.30. Elections, macro stuff, Middle Eastern wars and whatever else might lead directions in markets over 1, 2 or 3 months, but if you look at markets over 12 or 24 months, usually you can't see them anymore, he says. Over 10 years, you really can't see them. So, in my experience, you're normally best off just ignoring them. Lucky dip. An exception to the rule is buying on the dip, says Moll. 7im took the plunge and bought 2% of the S&P 500 on the 12th of December 2018 during one of the year's worst sell-offs. The index fell another 10% in the 12 days after and we did sweat a bit, he recalls, but eventually the team made their money back. 7im's 20-odd portfolios are informed by both strategic asset allocation and tactical asset allocation calls. Moll, who joined 7im in September 2018 from Coutts, where he was head of investment strategy, says the asset allocation process has not changed much since the wealth manager's merger with Scottish firm CAM in July 2018. But he says there has been more turnover than usual in the portfolios since Q3 2018, when the new management team slotted into place. All portfolios should basically be cousins of each other, and they had become too distant. They were second or third cousins. We thought, if we have a clear house view, we want to see this house view reflected in all portfolios. The strategic asset allocation serves as the long-term benchmark across the full range of asset classes in the funds and gets reviewed once a year at the end of June. Meanwhile, tactical asset allocation is reviewed more frequently, on a quarterly basis. Decisions are driven by the 6-person strong strategy team who obsess over the minutiae of each portfolio and meet twice a week to think about what the investment team should be doing. Changes must be first approved by the Tactical Asset Allocation Committee, made up of 7im's entire investment and risk teams. For more on this story, visit the news article link.